Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. It's the most loved KYC show in town. Also, let's give you some hints for the stock which we'll be discussing today, and the management will also be coming. The company is India's largest commercial and industrial renewable energy provider. That's the first hint for you. The second hint is the company listed on March 2. That means it's a newly listed company. So we'll understand how to actually judge the company and also with the industry in which the company is operating. The stock is down 19% from the IPO price. Remember, the small and mid caps have been impacted because of global geopolitical tensions and massive sell-off in Indian markets. And the company, however, this is very much important, posted a really strong Q3 numbers, because at the end of the day, earnings matter the most. So that is something which we'll be talking about. But enough of hints. Let's get to the company which would be in focus. And the company in focus is CleanMax Environment Solutions. This is the company which we talk about. And in KYC, we'll be getting this company and asking more details from the management as well. But the question remains is, why are we getting this company? Ye company kyun aa rahi hai? The first reason is definitely going to be on the factors that led to a very strong Q3 performance, because this is the first time company came out with its numbers post its listing. The second reason why this is interest for me and for everyone who is following KYC is that the capacity expansion plans and the key commissioning times. This is very much important for this renewable energy player. The demand trends, especially in the C&I space, that the company says it's the largest player. That's called commercial and industrial segment. That is also very much important, which we'll understand more about. The debt picture post IPO, the reduction plans ahead. Of course, they have taken some proceeds and retired their debt, but we definitely like to know, because this is an asset heavy business as well. Also important question is the cost of borrowing. That has improved from 9.46% last year to 8.7%. That means finance cost kam honge, profit badhega. That's an impact. Also, the impact on the pricing and the operations post these geopolitical tensions. The global inflation risk scenario is going up. Does this impact asset-heavy businesses like them? If yes, what are the mitigation factors? And the further collaboration and tech tie-ups. Interesting global names have come in from US, Japan, and the company is very forward-looking, especially when it comes to the tie-ups. So these are the key questions which we'll be asking. And to give us entire perspective, we'll be joined in by Kuldeep Jain. He's the founder and MD at CleanMax, to give us the entire picture of the company and the industry in which they are operating. But apart from this, let's talk more about the company CleanMax Energy. What's the entire story all about? How the earnings have happened? And is it too technical? No, it is not. I'll make it simplified for you. It's India's largest commercial and industrial renewable energy provider. And let's get into more details about this company. Almost 570 corporate business customers they have, and 3 gigawatts of operational portfolio across Asia. GW means gigawatt. 2.7 gigawatt contracted is already the execution capacity which we talk about. These are the key numbers you should know. And also, a third important point about the company is the strongest market presence they have in terms of the state presence is Gujarat and Karnataka. That is where they are having a good market share also. Apart from this, if you look at the key details, the global tie-ups they have, this includes, of course, the bigger name, which is Google, and also Toyota Tsusho. It's like a Toyota group company, and they also have a JV. It's called Osaka Gas Renewables. So futuristically, the company is making the right moves. There are 7 states where the commissioning is there: Gujarat, Haryana, Karnataka, Maharashtra, Rajasthan, and Tamil Nadu. And remember, these states are having a very good growth in the manufacturing setup as well. But what caught my eye is the data and AI. That segment contracted volumes are major growth drivers. Remember, they are high margin, high growth industry. So you can expect the company to command a high valuation also in this segment. And almost, you could say, 42% of this RE, which is the renewable energy power sales, is contracted just on data, and there's a big explosion happening in this sector. But अगर ये ज़्यादा टेक्निकल हो जाता है तो मैं आपको सिंप्लीफाई करके बताता हूँ. RE means renewable energy. C&I, confused मत होइए. It's just commercial and industrial. PPA, of course, you must have tracked a lot of thermal companies. It called power purchase agreement. And the last one is the plant load factor. So these are the key abbreviations. and it's very simple, this sector. Now the numbers to track, that's very much important. 76% of the customers, the new contracted capacity comes in with the existing customers. That means the same repeat customers start coming in, and of course cross-selling also happens. If you look at the numbers, it's 3.84 rupees per unit tariff for the 2.7 gigawatt contracted capacity for the last 11 months ending in February 2026. And if you take it in the group level, this amount comes in at rupees 4.25 per unit as well. So this is largely in line with the industry, or actually I could say slightly higher on the premium side as well, and that's why the company might command a premium valuation with itself. Almost 53% of the renewable power sales revenue CAGR is something which the number has come over the last 3 years. That's the data, and this top line growth is of course going to be seen in the income statement as well, but that will come a bit later. Also, there's a very interesting takeaway here. DK Khara, Dinesh Khara, as we all know him as the SBI chairman, he's the ex-SBI chairman right now. He has joined the company as a lead independent director, and that definitely augurs well for the perception of the company. But let's go and understand what are the rating parameters where we judge the company in KYC. There are 8 of them, but the first one is the income statement, balance sheet and the cash flow. This is the holy grail of the numbers where we judge the company, and the return ratios. Of course, they might be a bit depressed in this industry, but nevertheless, it's very much important. Shareholding, street cred, remember, stock को सिर्फ 1 महीना ही हुआ है लिस्ट में, लेकिन यहाँ पे देखिए street cred shareholding will have a limited history for that. Valuations, we'll compare them with their other peers. Interesting names are there, but these are larger players, and some of them are government related players as well. And the outlook, what the company wants to estimate and where the industry is going. So these are the 8 rating parameters where we'll judge CleanMax Enviro. The first one is the income statement. Let's see what the numbers are, and the numbers are really strong. Revenue and EBITDA, let's look at it. 3-year CAGR, all of them above that 25% mark coming in. Even the PAT numbers are showing strength. What is important is the third quarter numbers. Let's see how that numbers has panned out, and this has been done really well. The margins, that has gone up to 62%. Now that's a big question. Are these margins sustainable or not? That's the number I'm talking about, 62%. But nevertheless, all the numbers beat street estimates as well. Brokerages also gave a thumbs up, and so I'm also giving a thumbs up because the income statement has been strong for the company. Let's talk about balance sheet. And remember, company has come from its IPO. Some of the proceeds were used to retire the debt. And the borrowing number is something, whenever you look at an asset heavy company like that, you should be always looking at borrowing first. It's still a bit elevated, but nevertheless, some IPO proceeds have been used, and company is in its growth phase. A lot of commissions, or a lot of plants are getting commissioned. So you're going to see elevated borrowing, but the cost of borrowing is something which is very much important, and that is coming down. Post its listings, the bargaining power improves of a company. Cash bank balance, it's healthy, almost 1200 crores of that. So I would say the balance sheet management is strong by the company post its IPO. So I would be giving this a thumbs up as well. Talking about numbers, income statement, balance sheet, both of them have done really well. So I've given a strong thumbs up. But cash flow, let's talk about that. A little bit of lumpiness also comes in this type of industry. Remember, there's a renewable energy segment at play as well. The cash flow from operation, a good lumpiness jump in FY25, we are getting it. But nevertheless, this is very, you could say, the changes which are happening, it is not very much, you could say, certain. So that's why, to give it a balanced perspective, I'm going to give this a neutral rating for the cash flow segment. Let's talk about the return ratio. Generally, in this return ratio, the ROC numbers I have taken, and it's actually slightly coming down from FY22 odd levels, and it's kind of getting its long-term average numbers of 7 to 8 odd %. So that's a kind of a discovery we are looking at, and it'll be pretty much interesting. But nevertheless, I'll be giving this a neutral rating. Let's talk about the shareholding, and याद रखिए सिर्फ एक ही क्वार्टर का डेटा है, nothing much here. Promoters are having roughly 49% stakes. FIs, DIs have lapped up. Remember, there is some good investments coming in from the FIs, or roughly 30% of that is coming from the shareholding. It'll be interesting to understand more, but let's give it more time. So I'm going to give this a neutral rating when it comes to the shareholding. Street cred, of course, the market condition was also bad. We saw that in the month of March from the IPO. It's stock is down 19%. From listing, it's down 11%. Let's give it more time to give us a more perspective, especially कितना कमाई होता है आपके portfolio में. That's something which we'll talk for. And it's a neutral rating when it comes to the street cred. Valuations, I had mentioned you, this entire industry, the valuations is on the higher side. CleanMax, this is the P ratio which I have calculated. Of course, this is the trailing numbers. It's around 186 times right now. These keep on changing on the earnings. NTPC Green, Adani Green also above 100. And Acme Solar, however, they have some commodity business also, and that's why it's on the lower side, almost 47 times. But net, this industry will command these valuations until and unless this becomes more matured. Then you will have a proper valuations to see in the industry. So let's give in a neutral rating for the valuations. So we have done 7 ratings. Let's go into the 8th rating. It's very much important. That's the outlook. Almost 11 gigawatt of portfolio one is continued momentum in the commissioning and the contracting. And also let's look at the other important futuristic outlook for the company. The second important point would be a strategic partnerships coming in. I'm very much interested in the Osaka gas renewables. What happens next year? The world is going under a lot of stress. So this company, if it reduces or not, that's the big question. Almost 1.5 gigawatts of power sales capacity addition expecting in FY26 to 27. We should be having that as well. And also, let's pull out other outlooks also. Almost 1800 crore run rate would be there from the capacity commissions. This is what I've picked up from their presentation in Q3. Data and AI, that caught my eye, and this is something will be a major growth driver. India is at the cusp of this explosion in this industry. Apart from these important outlooks, the current business cycle, the debt, that might continue to rise, but their cost of borrowing has become cheaper. So that's a good point to talk about. And let's talk about the final rating, because this is a strong thumbs up already. Income statement and balance sheet has done well. Cash flow return ratios, we need to wait it out. And also it's a newly listed company, so the thesis plays out for shareholding street cred as well. Valuations, this will keep on changing as the industry matures, but as of now 100 plus PE is nothing you could say extraordinary. It's largely happening across all the players, but the outlook is something, especially on data and AI and the growth capacity commissioning, is something I'm bullish on. So net on the higher side of the ratings which we give in KYC, I've given it 5.5 out of 8 when it comes to CleanMax Energy. But interestingly, we'll have Kuldeep Jain. He's the founder and MD of the company. He'll be joining us, and a little bit of snippets about him, about how things pan out. He has 26 experience in consultancy and renewable energy. It's 26 years on that. Also, importantly, he is an ex-partner at McKinsey and Company, and the education, if you look at it, he's from IIM Ahmedabad and a qualified CA as well. So pretty much interesting take. And so Kuldeep will be joining us, and interestingly in KYC we are doing this for the first time. The management is joining to me physically in our show, and I think joining us would be Kuldeep Jain. He's the chairman and the MD at CleanMax.
How are you?
I'm fine. It's a pleasure
My
to
real
have you
pleasure
here.
to be here with you today.
Exactly. Just to put that in perspective, we discussed about your company, Kuldeep. Of course, it's a new company, but there's a consultant in you who has started this company, the way I've checked your website.
Sure.
Just want to put that in perspective, how different you are from your other companies or your peers. What is it all about it? And then we'll, of course, talk about the other questions as well.
The most important differentiator about us is we are direct to customer, or rather, if you think about the power or green energy, renewable energy business, we are the retail segment and not the wholesale segment. Wholesale segment is all the listed companies like an NTPC Green, Adani Green, Acme, Tata Power, JSW, which is that they participate in a government reverse auction, wherein at the lowest discovered price, they sell large volume, say 500 megawatt per contract, to a state power distribution company. Now the state DISCOM does not consume the power, it then gives it to the end consumer who is in industry. We go direct to the end consumer. So we are retail and not wholesale.
Okay,
this is the difference.
So that means in this business model, if it's retail, that means your margins would be better.
Yeah.
And I checked one more thing, that 77% of them customers are repeat customers, to put it in a simplified manner. So how does this customer stickiness work?
So our tariffs are higher. So if you look at the last fiscal capacity we commissioned, our tariff on that capacity was 3.7 rupees. look at for the other listed players, it would be around 2.5 rupees. So, by going retail, you get a tariff premium. In any business, true in our business as well. And then the other dimension is that, then the question becomes in any retail business, who are your customers? So about 80% of our volumes are with customers credit rated AA, AAA multinationals, and 42% is with data and AI.
And Kuldeep, the Q3 numbers, because there's always a litmus test which Dalal Street does, you have passed with flying colors. And of course, global situation was such that all the small cap, mid caps, large caps fell. So of course, the price discovery at times doesn't happen, and it's fine, it's a market condition. But I want to know this Q3 numbers, the margins was something, it went up to 60%. Now, on a sustainable basis, what kind of margin outlook we can expect, and can we expect this to continue in fourth quarter, first quarter as well? How the earnings looking like trajectory?
See, we have two business segments, and margins should be looked at differently, and I'll explain why. First business segment is renewable energy power sales. We own the asset, we sell the power, right? This is approximately 83% EBITDA margin business. Right, so it's capital intensive, but 83% EBITDA.
So that's one part of it.
That's one part.
Okay.
And that has consistently been at this number. Even here, this year the margin is 83, last year it was 81, so it is on an improving trend. The second part of our business is renewable energy services. Some companies, so
basically it's like an asset management service. And
it's an asset management service.
So if it's a core business, asset management services, that means it's like an AMC, so you'll have a higher margin profile in that?
No, in that, there is no capital intensity.
Exactly.
But the margins are 20%, which is above industry average, but it's 20%. So two segments, one is a 83% margin business, one is a 20% margin business. So the weighted average of full revenue pay, if you see, of course, then it's a function of the mix between these two. But in both these business segments, our margins have gone up.
Okay, so energy trajectory is expected to go up?
I think certainly in energy sales, yes, with operating leverage, we would expect, it used to be 3 years ago 75%, last year it was 81, this year it's 83, this will continue to improve.
Tell me about the cost of borrowing, वो सस्ता हो गया है. Debt आपका थोड़ा retire कर दिया आपने.
Yes.
Or right now debt is, of course, your business model is such you will have debt.
Yeah.
So how are you going to see this management going, and if finance cost gets reduced, can we get a good bump up in the little bit of margins also?
So as you've seen in our results, compared to start of the year, by end of the year, 50 bips or 0.5% finance cost has reduced
right.
on a weighted average basis.
Right.
And then if you see that the debt level at the end of the financial year should be around 9,000 crores, 50 bips of 9,000 is 45 crores of straight to the bottom line savings. So yes, that has been a benefit.
This is happening fourth quarter, you'll get the benefit?
Fourth quarter and full next year is when you'll really see the full numbers come in.
Right. And also the AI and the data center pack, India is a huge, it's at a, crossroads of, good explosion of this industry comes in. So how do you come in, just to make it a very simplified manner for our audience, and because 42% of that orders are coming in the RE segment. So how does it actually work? If you just give us the entire flywheel of that.
Thank you. So 2-3 points. First, data and AI is now 42% of our contracted volumes, right? And has grown 10 times in 2 years.
Just 10 times in just 2 years?
In just 2 years. Right, so it used to be, so as of 1st March 26, our data and AI contracted volumes is 2,400 megawatt or so. It used to be 240 megawatt 2 years ago. So 10 guna in 2 years.
10 guna in 2 years, that's pretty much interesting.
Right, so that is a reflection actually. Of course, we have done well, but it's a reflection of the kind of boom we are seeing in the energy demand. And what we've also said in our results is we have a number of data and AI customers, repeat volumes with companies like STT, new volumes with L&T Data, Princeton Digital, Iron Mountain, and so on.
Talking about the tie-ups also, there is Google, there is something from Toyota Group also, and also right now you are having a JV for your gas segment as well. So how does this, foreign tie-ups help? Is it the technology transfer here, or is there something more to it?
So we co-invest with a lot of foreign companies. Because it is an energy intensive, it is a capital intensive business, and lots of leading foreign companies in the energy space want to do this kind of business in India, but do not have our kind of capability. We are the market leader. So they say, look,
And if you talk about being a market leader, is there a market share attached to it?
Yeah, it's called the CNI market. The market is defined as commercial and industrial market, which is the way I was explaining. If you're the retail part of the market, you go directly to a corporate. That's called CNI market. We are number one player in that market in India. We have a 12% all India market share.
And that's the organized we are talking about.
That's the organized market for direct supply of energy to corporates.
Right.
Right. We are number one player in that space. Now, what are we doing with companies like Osaka Gas is that we have a CleanMax majority-owned joint venture. So we own 51%. They own 49%. So
that comes in your consolidated in the numbers.
So it is our controlled and managed entity. And they have invested about 190 crores or so of equity in the first phase to build a certain volume of assets with us. Right now, why would we do it? What is the benefit for us? One is, yes, as you said, the strategic value. You get a great partner in from Japan. You get access to some lower cost
and
capital.
And you get access to their
certain
Japanese
clientele and
capital,
so
right.
on. This is a sort of strategic value. But there's also a hard financial benefit, which is this is a capital intensive business and we are lowering the capital intensity for us. So that 190 crores, otherwise I would have had to raise and put and so on.
Exactly, because whenever we talk about net zero, Nordic countries comes to my mind, and eventually a Nordic tie-up and a Nordic funding is something which most of the Indian players also look forward or aspire to.
Yeah.
Is there anything in the work from the Nordic front as well?
So, we have a lot of, we have 2-3 such partners. In addition to Osaka Gas, we also have Toyota Susho, which is not Nordic, but part of the Toyota group. And they want to, also invest in India, initially serving automotive and other Japanese companies and then expanding. But we are open to partnerships from like-minded players. Our focus, though, is that we are not seeking financing or funding. This is not a loan. This is a true equity partner who is with us for life.
All right. Apart from this, global issues are there. Your costing is increasing, be it any energy setup. Is that going to impact you also? And if yes, any pass-through mechanism is there?
See, the beauty of renewables is we are a 93% gross margin business. I used to be a consultant, you mentioned. I've never seen any business which is a 93% gross margin business. Because I always jokingly put it that Surya Dev or Vayu Dev paisa nahi lete, right? In other words, you don't pay for the cost of the fuel, right, which you have to pay in gas or coal.
But anything in the operational cost, any hit coming? Bit?
No, not really.
Not really.
Neither in operational costs, neither in capital expenditure. If anything, I think it's a huge plus because everyone's sitting up and taking notice and saying, listen, in the end, we've got to be self-sufficient in energy, which is our energy should come from our...
And maybe this is a big lesson.
There's a lesson
we are going through right now.
All over the world that, you've got to be self-sufficient.
So energy security is important. But there's one kind of a concern. There is a word called net zero. It's at times used, at times it's abused. What is it actually all about, net zero? And does it actually fall under, where India is going towards? Or the net zero projects, have they actually come, or is it just the namesake certifications?
So net zero really refers to ki if you're doing any business or any activity, you should do it in a way where carbon emission nahi hota hai. Why carbon emission is important? Because all the carbon emission added up is causing climate change and global warming. And that has real issues for countries like India. We talk about rain patterns are changing.
Exactly.
And farmers are suffering as a result. So it's not a theoretical concept. It's a concept which is hurting us also as a nation.
So is India lagging behind on this, or are some green shoots coming in?
I think we are making progress. But I started this business 15 years ago with the purpose that I will be net zero partner to corporates.
Right.
Because half of the power consumption in our country is corporate sector. And we can give them cheaper and greener electricity. So in their journey of net zero, they're also saving money.
Okay. It's a pleasure talking to you, Kuldeep. We are out of time. I hope we had more time, but of course, we'll have conversations in future also. It's a pleasure talking to you about your company and the industry.
Thank you so much.
Thank you. So this is the management of CleanMax Environment. And this is it, folks, for KYC. Stay tuned to NDTV Profit.